Sing that shit.
Hello buddies, welcome to my YouTube channel. Before going ahead to the topic of the video, I would like to introduce myself. So I am Saloni Shika. I'm a qualified chartered accountant. I cleared in May 18 and as of now I'm working in an audit department in one of the big four. So today we gonna discuss the impact of coronavirus on financial reporting and the auditor's consideration. Now, before going ahead, I would like to discuss the source of this video. So, whatever I have discussed in this video that I have taken from ICI Accounting and Auditing Advisory, which was issued in their website. Link is here, you can refer to that. Also, whatever discussion covered in this video is not exhaustive, but yes, I have tried my best to cover main points in limited time. But also, if you want to have deep dive or have more understanding, it is recommended to refer the given source. Moving ahead with the contents. So I have divided this video into two parts, that is part A and part B. So this video is obviously part A, in which we are gonna discuss impact of coronavirus on financial reporting with respects to Ind AS and AS. In this, what areas we are going to discuss, that is inventory measurement, impairment of non-financial assets, financial instrument, lease, revenue, provision contingent liabilities and assets, modification and termination of contracts, going concern assessment, income taxes, consolidated financial statement, PPE, presentation of financial statement, borrowing cost and post balance sheet item. And then in part B, we are gonna discuss impact of coronavirus on audit of financial statement, and there is some message for CA students. Okay, now we'll see how the COVID gonna impact the inventory area. So in this scenario, neither we are placing any online order nor we are purchasing anything. So if we'll think from entity perspective, their stock are lying idle in their warehouse like this snap. So how the entity gonna measure this kind of stock in their books of account? That'll be one question. So that measurement gonna take place as per the provisions of Ind AS 2 and AS 2, which says that it might be necessary to write down inventories to NRV, that is net realizable value, due to reduced movement in inventory, decline in selling price, or inventory obsolescence due to lower than expected sales, which could be the COVID situation. Now, what is NRV? So, it is the net amount that an entity expects to realize from sale of inventory in the ordinary course of business, that you guys knows. Now, apart from this measurement, there need to be a disclosure which is to be given in your financial statement in relevant with Ind AS 2 and AS 2, also in relevant with Ind AS 1 and AS 5. So that you'll have to take it into consideration that the disclosure requirement are currently given in your financial statement. Okay, now we'll see the impact of COVID on impairment of non-financial assets, which is governed by Ind AS 36 and AS 28. Now, what is non-financial assets? So these are patents, trademarks, copyright, etc. Now, as per the Ind AS and AS, it says that at the end of each reporting period, whether there is any indication that the non-financial assets may be impaired. So if there is some indication that non-financial assets should be impaired, then we'll have to take that impairment into consideration. Now, what are those indications? That is extensively or exhaustively given in this Ind AS and AS 28. In that, one of the indication is economic criteria. So that indication we can relate with COVID. How? So there might be a temporary ceases of operation or an immediate decline in demand or prices, which can result in lowering of revenue and profitability. So if your revenue is lowered, your profitability is declining, then obviously your economic activity will reduce. So this criteria management may consider and may require impairment testing for the purpose of Ind AS 36 and AS 28. Correct? Now, for goodwill impairment, there might be significant changes with an adverse effects in operation of CGUs, that is cash generating unit, to which goodwill is allocated, and therefore it requires additional focus and attention. Now again, in this disclosure requirements which is there as per Ind AS 36 and AS 28 need to be taken into consideration, and the same has to be adhered to. Now we're gonna deal with impact of COVID on the financial instruments. So the relevant Ind AS is 109. So whatever the financial instrument, what are the financial instruments like loans, trade receivable, other receivables, etc. So all those instruments which are within the scope of Ind AS 109, if they are not measured at fair value, correct, through these mode, then they're subject to impairment loss recognition and measurement. Correct. Now, how this impairment loss and measurement is based? That is based on some approach. What is that approach? That approach is called expected credit loss. Now, what is this approach all about? So this approach was introduced to strengthen the accounting recognition of loan loss provisions. And how it is measured? So it is measured based on probability weighted amount that is determined by evaluating a range of possible outcomes. So this is a kind of approach through which we can measure the expected credit loss, or you can say we can take the accounting recognition of loan loss provisions. Correct. Now this COVID-19 scenario may impact on quantification of ECL. Also, the classification of financial assets into three buckets that we already know as per the relevant standards. So that management has to take in care that how this COVID-19 is impacting the quantification of ECL and also the classification of financial assets. Now again, there are some disclosure requirements. So the entity needs to disclose the impact of COVID, like what? Like method, assumption, and information. What is the method, assumption, information used in estimating ECL? That also the entity is required to disclose, and also the policy and procedures. Correct? Now if we'll see the accounting standards, then whatever the financial assets it's there, the entity should apply AS4, that is contingency and event occurring after balance sheet date. Also for AS13, if they are doing accounting for investment, entity has to consider the requirement of making provisions for decline in the value of investment which is other than temporary. So that entity has to make sure if they are applying AS13. Also, in respect of bank and insurance, so whoever the preparer is, they need to consider the impact of COVID on classification of loans and advances into standard, substandard, and doubtful and loss. Correct? So impact of COVID on fair value measurement. So as you can see in the pictures, there are numerous factors which determines the fair value. Okay. Okay. Now we'll talk in respect to Ind AS 113. So Ind AS 113 recognize that there are different ways in which fair value is determined, right? What are those? Those are observable market, quoted price in active market, that is level 1, or application of valuation techniques, which is level 2 and 3 as of reporting date. Correct? Now, due to the COVID scenario, as we all know, there could be a significant decline in market price of various financial instruments like equity, bonds, derivative. So these features management need to take into consideration, and also they need to apply the professional judgment to determine that whatever the quoted price is there are based on transaction in an orderly market, right? Also, all those management who are using the valuation techniques, they need to consider the impact of COVID on various assumptions they would have taken, like discount rate, credit spread, counterparty credit risk, etc. So these are the factors which can be affected due to the COVID scenario. So that management need to be a very keep a vigilant eye that how they are applying the same. Now, if we'll talk in respect to AS 13, that is accounting for investment. So in this, entity has to consider the impact of COVID on determination of fair value for valuation of investment, which is classified as current investment. Okay. Now, talking about leases, do you think there will be any change in lease agreement due to the impact of COVID? Yes, there could be. How? So, the lessor may give some concession to the lessee with respect to lease payment, rent-free holiday, etc. Correct? Now, if that is there, then we need to see whether it lead to application of accounting related to modification of leases, which is prescribed under respective Ind AS and AS. Correct? That will be one management consideration. The other would be there are variable lease payment that is linked to sales or revenues. So because revenue will be impacted, we need to see how these lease payments are impacted due to COVID. Correct? Now, for the discount rate which has been used to determine the present value of new lease liabilities, that discount rate need to be incorporated that if any risk is associated with COVID, right? Again, if there is any compensation is given or declared by the government to the lessor for providing concession, the same the management need to think and apply the accounting as per Ind AS 1116 or 19, or if the assistance is given from government is to be accounted under government grants Ind AS 20 and the relevant applicable AS, right? Also, the entity need to determine whether as a result of COVID, any lease arrangement which has become onerous, the same should be accounted as per AS 29, which we'll discuss further. Now, seeing the impact of COVID on revenue. So, because of the COVID situation, there could be an increase in sales return, decrease in volume discount, and higher price discounts. So if we'll refer to the Ind AS 115, these factor needs to be considered when we are estimating the amount of revenue to be recognized. So that is something management should look at it. Now also Ind AS 115 requires disclosure of information relating to nature, amount and timing and uncertainty of cash flow which is arising from revenue. So that the management need to take care of in this COVID situation. Also, if we'll see as per AS, then entity may have postponed recognition of revenue due to significant uncertainty of the collection due to COVID situation. Then that time also entities need to disclose the circumstances in which the revenue recognition has been postponed. Okay, now we'll see the COVID impact on provisions, contingent liabilities and contingent assets, which is governed by Ind AS 37 and AS 29. So first, management has to consider whether their contracts have become onerous. Now, I'll tell you what is onerous contract. So, onerous contract is a contract for which the unavoidable cost of meeting the obligation. I repeat, for which unavoidable cost of meeting the obligation under the contract exceeds the economic benefit expected to be received under it. That means the unavoidable cost is more than the expected benefit. Then the contract is said to be as onerous contract. So if that is there, which could be there because of the COVID situation, then that the same has to be accounted as per Ind AS 37, right? Now, Ind AS 37 also requires that assets dedicated to the contract to be tested for impairment before a liability of an onerous contract is recognized. Correct? Now, there could be an losses from imposition of penalty due to delay in supply of good, which may be the scenario during this COVID situation, that need to be considered under the guidance of Ind AS 115, that is revenue from contracts with customer. Correct. Now, if the management is unable to assess whether the contracts are onerous, it may be due to inadequacy of information, and which can mainly due to COVID situation, then what should the management do? Then the same should be disclosed. So management has to disclose in their financial statement. Correct. Like management is unable to assess whether some of the executory contracts have become onerous due to inadequacy of information relating to COVID. Correct. So that we need to disclose that we are not able to assess that the contract is onerous due to the COVID situation. Correct. Now, there could be a restructuring cost. So the management has to make sure that it is only recognized when the general recognition criteria for provisions are met. Okay. Now for insurance claim, entities may have insurance policy that covers loss of profit due to business disruption due to events like COVID. Okay, so we need to ensure, the management need to ensure that the claims of insurance companies can be recognized only in accordance with Ind AS 37. That is, only if the recovery is virtually certain. Okay, means the insurance entity have accepted the claim and the insurance entity will meet its obligation. Then only we can go for this claims and all, right? Now, due to COVID, there is a need for exercise judgment in making provision for losses and claims. A provision may be accounted only to the extent that there is a present obligation for which the outflow of economic benefit is probable and can be reliably estimated. So that management need to very vigilant of that the same uh, the criteria which is given under Ind AS 37 regarding provision for losses and claim, the same is being taken care of. Now, due to COVID scenario, there could be a modification or termination of contracts and arrangements, right? So the entities may modify or terminate certain contracts which may within the scope of other Ind AS or AS or guidance notes. So entities are advised to consider specific requirement of those standards and guidance notes to account for this modification or termination. So here are the list of the modification or termination of contracts that could take place due to situation of COVID. This is the for the entities whose to whom the Ind AS is applicable, and these are for the entities to whom AS is applicable, like employee benefits, share-based payments, financial instruments, insurance contract, revenue from contract with customers. And for AS, it would be employee benefit, guidance note on employee share-based payment, derivative, construction, revenue, and real estate account. Now, going concern assessment. So, as we know, because of the impact of COVID, there could be a doubt on going concern for the entity, right? So, the management should assess the impact of COVID and measure taken on its ability to continue on going concern decisions. Okay. So, the impact of COVID should also be assessed after the reporting date. Correct. Now, if management after the reporting date either intends to liquidate the entity or cease trading or has no realistic alternative to do so, the financial statement should not be prepared as going concern basis. If entity feel that even after the reporting date, because of the COVID situation, the entity needs to liquidate or cease then the entity should not prepare its financial statement as per going concern basis, and the entity should disclose as per Ind AS 1 like material uncertainty that might cast significant doubt upon an entity's ability to continue as going concern. Correct. Now the same if we'll see in relevant to AS1 and AS4, it says that going concern, we need to ensure that going concern assumption is appropriate or not, and also we need to see and use the fundamental accounting assumption of going concern in the preparation of financial statement. Okay, now we'll see the COVID impact on income taxes. So this COVID scenario can affect the future profits, or it may reduce the amount of deferred tax liability, or may create an additional deductible temporary differences due to various factors like impairment. Now, entities having the deferred tax asset should reassess forecasted profit and recoverability of deferred tax assets in accordance with the relevant standards. Because of this situation, the future profit may affect, so the entity need to reassess the same. Now, management might also consider whether the impact of COVID affects its plan to distribute profits from subsidiary. And if that is so, then management needs to reconsider the recognition of any deferred tax liability in connection with the undistributed profits. Followed with this, the management should disclose any significant judgment and estimates which is made in assessing the recoverability of deferred tax assets in accordance with Ind AS 1, so they should disclose the same. Now, there are few provisions related to consolidated financial statement which management should keep in mind during this COVID situation. So, if I'll talk with relevance to Ind AS 1110, it says that the financial statement of parent and subsidiary used in the preparation of consolidated financial statement are usually drawn up to the same date. It may be noted that in any case, the difference between the reporting dates should not be more than 3 months as per Ind AS 1110. If we'll talk about AS 21, it says that the difference between the reporting date should not be more than 6 months. So those who are preparing for consolidated financial statement, they have to keep these two dates in mind. If they are following Ind AS 1110, then 3 months, and if they are following AS 21, then 6 months. Now we'll see the COVID impact on property, plant and equipment, that is PP. So as we know, as per Ind AS 16 and AS 10, it says that the useful life and residual life of PP needs revision in annual basis. Correct? Now if we'll see the COVID situation, then PP can be underutilized or not utilized for a period of time. So do you think we need to charge depreciation? But as per the standards required, depreciation is charged even if PPE remains idle. Correct? Further, the COVID impact may have affected the expected useful life and residual life of PPE. That we need to make sure of what are the impact. So management has to review the residual value and useful life of the assets. And if management finds that the expectation differ from the previous estimates, then we'll have to account for the change as an accounting estimates in accordance with Ind AS 8, and if they are following AS, in accordance with AS 5. Now if we'll see the COVID impact on presentation of financial statement, which is mainly governed by Ind AS 1. So in as per Ind AS 1, if there is any breach of loan agreement, which includes classification of liabilities into current and non-current, but due to the current situation, there may be instances of breach of loan agreements which may trigger the liability becoming due for payment and liability becoming current, right? So we need to make sure what all are the liabilities we are classifying into current and non-current, whether that is actually as per the provisions and actually as per the paragraphs of Ind AS 1, right? Now, again, in the presentation of financial statement, as per Ind AS 1, if you refer the paragraph 1 to 5, it talks about estimation uncertainty. So, which requires an entity to disclose informations about the assumption it makes about the future and the other major sources of estimation of uncertainty at the end of reporting period that have significant risk of resulting in a material adjustment to the carrying amount of assets and liabilities within the next financial year. So this COVID situation may have created many uncertainties about the likely future scenario, so which may affect this paragraph, and you have to make sure that the same has been disclosed. Now also as per Ind AS 1, there requires an like a user must be able to compare the financial statement of the entity through time in order to identify trend in its financial position and performance, and also compare it with financial statement of other entities. For that, the preparer may consider making adequate disclosure and explanatory notes regarding the impact of COVID on its financial position, performance, and cash flow. Okay, now referring to borrowing cost, the management need to consider one thing in mind, that the capitalization of interest is suspended when the development of an asset is suspended. So it could be a situation of COVID, the development of assets is suspended. So management need to ensure that its capitalization of interest is also suspended. Now if we'll talk about post balance sheet events. So COVID outbreak surfaced in December 2019 and the condition continued to evolve throughout after December 19, right? So the entity must disclose the significant recognition and measurement uncertainties that might have created by outbreak of COVID in measuring the various assets and liabilities. Also, the entity should disclose how they have dealt with the impact of COVID on financial position and financial performance of the entity. So now we are done with part A of our video, in which we have seen how the various Indian accounting standards and AS will be impacting in this COVID scenario, and what are the things management should be taken care of or accountant should be taken care of. Now, in the part B of the video, which I'll be posting soon to my YouTube channel. In that, I'm gonna discuss the impact of coronavirus on audit of financial statement, which means I'll be dealing the various auditors' responsibility in this scenario in relevant with various standards of auditing, and also I have few message for all those CS students relating to their exams. So stay tuned to my part B of the video, and thank you for watching this video. Have a good day.